Street View segment. Piyush Garg joins us, EVP and Chief Investment Officer with ICICI Securities. Piyush, I guess the root reason for this correction is well documented, which is global. But my question to you is that is today's correction giving a good buying opportunity for those who always wanted to buy, or it's too early to commit? It's too early to commit capital.
Hi, good afternoon, Nikunj. No, I think Indian macros are improving and they are likely to improve further. And I think government is taking steps in the right direction. We could debate whether it is fast or slow, or insurance bill, whether it happens just now or happens 3 months down the line. So those things are a little difficult to say. But otherwise, I think the direction of the reforms or whatever the government had or what the market was envisaging from the government since the day the new government was formed, I think those are more or less on the right track. The corporate numbers are showing a bit of I think a positive bent at least. So even if you talk about SBI numbers today, I think the direction is right. The NPA concerns are ebbing, etc., etc. So overall, I think the Indian macro seems to be improving, and we have massively underperformed global markets in the last 3-4 years. Let's not forget that. So there is no reason that when they fall, we also fall to that extent. So if you, for example, compare DAX just now, I think DAX is off or some 11-12% from the peak. We are hardly off 3-4% from the peak. That is because we never made that high as what DAX made in the last 1 or 2 years. So to my mind, I think this market remains a market which you buy at dips. Yes, level wise we could discuss which level looks good. Last couple of months market has, I think, shown a good support somewhere closer to this 74-50 odd levels. So which is not much away from today's low. So it's about 100 points away on the Nifty side. I think that levels makes a good entry point for the market, and I think if you're a medium-term investor, yes, I think every dip is a buying opportunity.
Piyush, afternoon. Whenever you have a market sell-off, it's the high beta pocket, the rate sensitives that take the most knock. Case no different today either. Auto index down over 2%. We are waiting for numbers for M&M as well. What's your reading on what you think the coming few months will hold out for the auto companies? Do you think we've seen the worst of the cycle and it's behind us now?
No, I think as far as commercial vehicles, car sales, etc., two-wheelers is a slightly different story. But I think as far as these two four-wheelers and truck sales, LCVs, HCVs, etc. are concerned, I think the worst is very clearly behind us. That is very evident from the monthly numbers that you see. The slowdown or the negative growth rates that was there in the HCV, LCV category has massively got arrested. Car sales has also picked up a bit. So I think the last 2 months number, June and July numbers, are showing a positive trend in terms of year-on-year basis or even on a sequential basis. So I think I would be more positive, and I would say that it would be in line with what the macro scenario would emerge over a period of time. Yes, I think it's not so easy to predict at this juncture that economy will bounce back to 6.5-7% when. It could take 15 months, 5 quarters, 6 quarters, difficult to say. But the trajectory seems to be up, and auto will be a beneficiary of discretionary spending that will pick up as the economy picks up.
Piyush, we are at least 45-50 days away from the Q2 earnings season. There are no triggers in the short term. Nothing big is expected from global markets. So for next 6-7 weeks, what could be the trigger which will drive Indian markets up?
One trigger could come, which I am also hearing, is that there could be some announcement that could come on 15th of August from the Prime Minister. So I'm not sure how big that trigger could be or something. I think the noises from the government side are more positive than negative. And there is always a slight positive surprise chance also that can come from that side. So that fact cannot be ignored. Second thing is that many a times now this global sentiment or this global geopolitics is all bad. And for the global market, there is this dollar rally happening, and hence rupee is also showing is under pressure. All that, these things also tend to get arrested at some point or the other. And we have seen, I think we saw even last week, beginning of this week. Last week also the closing was very bad. It looked that we are headed to 74.50 sooner than later. But I think the first 2 days of this week, markets rallied back to almost 77.50 or 7800 levels, closer to that. So market bounce back is also as sharp many a times. So from that perspective, I would say that Nikunj, it is slightly it would be erroneous on my part to think that there could be too much of a downside to this market. I would say that the downside as of this juncture largely looks limited unless the geopolitical risk escalates or something, which obviously we cannot discuss, we cannot predict. I don't think even US President knows that how geopolitical risks are going to fare out in near future something. So that is one thing we need to watch, but this would be more an opportunity. I would say one should think of all these downsides which is arising from geopolitics, geopolitical risk more as a opportunity rather than a threat for the Indian market.
Piyush, the interesting part of this market is that even though Nifty has seen a sizable cut between yesterday and today, the flow activity is still on our side. Foreigners, they continue to buy in the cash market. Domestic institutional investors who were net sellers, they've turned net buyers. So if big institutional investors are supporting this market, I wonder who's selling it down.
Nikunj, this question I do not know. I have also spoken to many people in the last many years and not got any answer. We have seen, I think if you see even the month of July, I think FIs have bought closer to some 5 billion or so in the month of July. Still the market, even if you don't factor in today's fall, is hardly up 1% or so from the beginning of July, from where the market started. So I think it's not one number that is important. It is the overall thing also. I think from a overall market is much bigger than any market participant to my mind. Just seeing FI numbers or just seeing DI numbers in isolation, to my mind, is a wrong way to look at markets. Yes, I think FIs if they have to sell at 7200 levels, even if there is a global risk off at that time also, which is heightened from what it is at present, I think they will sell at that level and they will even buy at 7800 if the global risk on is on. And so I think it's and we have seen this many a times. Market rallies 400, 500 Nifty points despite FIs hardly buying 2,000, 3,000 crores in the cash market. So market is bigger than I think any segment in the market, and that number should just be seen from the point of view of where institutional money is going or coming, but nothing beyond it, Nikunj.
Piyush, really appreciate you taking out the time and joining in for that quick chat this afternoon. That's the word coming in from ICICI Securities.